Okay, so hiyo ni poa. So guys, welcome to the Forex Crypto Hub weekly market forecast. Last Sunday we did not have the session. I was held up somewhere, but I had updated you. So today we resume with our weekly market forecast sessions, and as usual, we are going to first check on sentimental analysis. We're going to first check on sentimental analysis, and then we move to fundamental analysis and conclude with technical analysis. So starting with sentimental analysis, we will first have a look on what other traders are up to. So we are going to use my FX book. We're going to use my FX book, and then under my FX book, you go to where we have a community. Go where we have community, and then uh, oh, sorry. Let me share my screen. All right. I hope you can now see my screen. I hope you can now see my screen, right? Hello. Somebody confirm you can see my screen. All right. So you can proceed. So you go to my FX book. Then you have that section where we have a community. And then you click on sentiment. You click on sentiment, or you can see also the sentiment on its own. It's not a must for you to go where we have community. We have sentiment on its own. So once you click on sentiment, you drop down there, and then here are the sentiments. So here are the sentiments, and let's see. First, we start with the Euro USD, and for Euro USD, you can see that for Euro USD, we have shorts, or the traders who are on sales are 43%. So 43% of forex traders are on sales on Euro USD, as you can see, and then 57% are on buys. So in this case, I'll be joining the sellers. That's now the 43%. After that, we are going to have GBPUSD. You can see sales are 40%, longs are 60%. So in this case, joining the sellers will be a nice decision. So you can just check on all other pairs which you trade. You can see, like for your USDJPY, shorts are 77%, longs are 23%. So in this case, I'll be joining the longs, which is now the 23%. GJ as well, you can see shorts are 43%, sorry, 57%, shorts are 43%. So joining longs will be a better option. For USD card, you can see shorts are 45, longs are 55. So joining shorts will be a better option. But also when you look on those percentages, they are almost catching up. But these are 10% is a big difference. 10% is a big difference, not small. So let's just go down and look for gold. Card JPY is another pair you can closely monitor. Card JPY. You can see shorts are 68%, longs are 32%. So going with longs, will be better. Going with longs will be better. Let's check on XAUUSD. XAUUSD. Here it is. So when you come to gold, you will see that 32% are on shorts, while 68% are on buys. So in this case, we are going to be joining the minority, which is the 32%. We are going to be joining the 32% of traders who are selling. Yeah, we have always had that saying of that. How does it go? Let me remember it, and then I'm going to let you know. So that is it on the sentimental analysis. That is it on sentimental analysis. So now we have to check on the fundamental analysis part. We have to check on the fundamental analysis part. We check on how the economic calendar looks like. So somebody is asking about why the minority. So it's just a sentimental psychology behind trading, where you have many people talk about you go with the minority and so on. So yeah, and in this case you get that retail traders are the majority in the market. So if you see that high percentage, like for example here in gold, where you can see that 68% are on longs. That means this is 68% of traders are on longs, and majority of them are what? Majority of them are now the retail traders, right? Because most of them will be using just the normal concept of buy low or buy at support, you know. But what they will do, they will buy late. They will not have joined the market together with the smart money guys. You know, smart money guys get their entries early. So now, if your strategy is not that well, you will get your entry late. You know, yeah. And smart money or institutions, they position themselves against the crowd. That is now why I'm talking about you going with the minority. When you see those percentages, that means this is now where smart money guys are. This is where hedge funds are. This is where banks are. Like in this case, they are now in the 32%. 32%. I hope I've answered the question. Somebody and asked the question, so I believe the question is answered, and every one of you is able to understand why. So with that being said, we can move to the economic calendar. And first, before we start exploring it, just a reminder to you. Remember, the Iran, Israel, and US conflict or war is still ongoing. The war is still ongoing, so don't forget that. And maybe you might have asked yourself one question: why is there a war and gold is still selling? Why? If you have not asked yourself that question, and if maybe you have already asked yourself that question and you don't have an answer, then I can just give you a clue. Go and research about bonds, US bonds. That will lead you to, the fundamental side is very wide. So we have, remember last week we had the FOMC, the Federal Open Meeting Committee. The interest rates report was released. We had a rate pause. On the other hand, when you look on inflation, because of the war, inflation is gearing up, As you can see from my screen now, you can see it was 4 hours ago. Iran to completely close the Strait of Hormuz if power plants it. Iran president. The Strait of Hormuz is open to all except those who have violated our land, and we confront reckless threats firmly on the battlefield. So you can see this statement from the president that the Strait of Hormuz is going to be closed completely. So what does that mean? That one is a good news for USOIL. So we are going to see USOIL prices skyrocket, and if the price of oil is going to skyrocket, remember oil is core to all industries. So what will likely happen? Inflation is likely to go up. Inflation is likely to go up, and I believe each and every one of you knows the definition of inflation. If you don't know, use your browsers, use your chat GPT as well, go and research, understand it better. So we can now jump into the economic calendar and see what we expect this coming week. So tomorrow being on Monday, I don't see any major news. Tomorrow being on Monday, I don't see any major news. Let's move forward. On Tuesday, the major news on Tuesday I can see is flash manufacturing PMI, that is in Germany. Remember, sometimes back I explained to you what the euro currency is. If you don't know, just go and research the history of euro. Where did the euro come from? The rest you can see, our currency is named with its country, but for euro, it's not a country, right? So research on the history of or the origin of euro currency. You'll get to understand a few things from that. So we will be having that flash manufacturing PMI as well as the flash service PMI. And as you all know, I don't much follow this economy, so I got nothing to comment on that. So we move forward on the same day at 12:30 p.m. we are going to have flash manufacturing, that is on the pound. Something that has caught my attention here is now the 10-year bond auction. 10-year bond auction. When it comes to bonds, most people don't give much attention to them, but they are very, very, very critical. Like currently, what is driving gold mostly to those sales is the US, is it 1-year or 10-year bond, something like that. When the bond is strong, the dollar is strong. So what do you expect to happen to gold? Gold is just dropping like crazy, man. Gold is just dropping like crazy. So maybe somebody might have heard the word bond for the first time. And talking of a bond, this is like it's a debt. What does that mean? You lend your money to the government. The government is now going to pay you interest in terms of what they call now yield. You hear of 1-year bond yield, 10-year bond yield, 30-year bond yield. So the government will pay back your capital together with interest upon maturity, right? So with time, when we will be looking on fundamental analysis, we'll check more into details on these bonds, because we have types of bonds where we have T-bills, we have T-notes, and we have T-bonds. T-bills are short term, they have no interest. We have T-notes which are medium, we have long-term ones which are not the T-bonds. We have T-bonds and T-notes. Differentiate that. And for T-bonds, these are not the long-term, like 20 to 30 years, and their interests are fixed. If it's 5%, it's 5%, right? Yeah. So so guys, I was just trying to give you some clue of what's really happening. So let's proceed. Later in the evening on the same day, that is Tuesday, we are going to have flash manufacturing PMI. That is on US. That is in the US. That will be at 4:45 p.m. 4:45 p.m. 4:45 p.m. Sorry, 4:45 p.m. And I told you the other day, PMI stands for Purchasing Managers Index, right? So, and we normally check on the outcomes. So in this case, the data is not updated, the whole of it. What we have here is the previous only. We don't have the forecast. So, as I have always been telling you, when it comes to PMI, you look for the outcomes. If the outcome is above 50, that one shows expansion. And if there is expansion, that means the economy is doing well. So that is a good news for the dollar. You expect the dollar to be bullish. If it's below 50, that is contraction. That's bad news for the dollar. Now, if it's at 50, that's neutral. That's neutral. Yeah. So that is it for Tuesday. Let's proceed. On Wednesday, we're going to have CPI on JPY. CPI. On Thursday, we are going to have the weekly unemployment claims. That is in the US. You can see the previous week it was at 2 or 5K. This week they are expecting an actual, sorry, not actual, but this week the forecast is that the number is going to increase. So what I can expect is that there's high probability we are going to have an actual less than the forecast. Which is going to be a good news for the dollar. Yeah. Now going to Friday, which is now the last day of the week. You can see that on Friday, on the pound, we are going to have what we call the retail sales. That is on Friday. We are going to have retail sales on Friday. In the US. Sorry, not the US, but the pound. In the UK. It will be on the UK. That is on the pound. So that is it for the week under the fundamental analysis section. So we move forward to our conclusion now. Which is now in the technical analysis part. Up to that point, is there anyone with a question? So If you have any question, just type there in the message section. I'm going to check on it. Yeah. So wanted to show you something. So so these are the bonds. These are the bonds look like. We have a 1 year bond over here. We have the 2 year bond, 3 year bond, 5 year bond, 7 year, 10 year, and 20 year bond. And we have the 30 year bond as well. So that is how the US bonds look like over here. I hope you can see something. So that is it on the US bonds. So guys, let's jump into our analysis. So this is what I shared. I shared this trade actually. I shared this trade that was on Bitcoin, and as you can see, so far so good. Things are Bitcoin is doing well. So if you go to weekly time frame, going to weekly time frame on Bitcoin, you can see there's high probability that the market is going to keep on dropping, which is clear on is it daily time frame? Yeah, on daily time frame you can see that this bearish flag. We have this bearish flag on daily time frame. So I expect this Bitcoin to keep on dropping. That's why after seeing that, I shared the trade with you guys. In course of the day, I shared the trade with you. For those who took the trade, I'm sure you have had some good number of pips so far. You have had some good number of pips so far. So let's jump into our today's analysis, and we first start with the DXY, which is the dollar index, as it's very key. As the DXY is very key. DXY is very important to us. So we start with the dollar index. We start our analysis with the dollar index. So we are going to have some fresh analysis on the dollar index. Remember, it's been 2 weeks we have not done analysis on this, so let's have a fresh analysis. So allow me to start from monthly time frame. Remember, higher time frames are for giving you the market direction. Higher time frames are for market direction or the bias. So now coming to monthly time frame, you can see where the market is currently at. We have slightly above there, we have this imbalance. I've marked it, and looking now at where the current market is at, you can see we have a lot of liquidity resting over here. We have a lot of buy side liquidity, so I expect the market to take out this liquidity, and by so doing, where the market can possibly go to is now to our fair value gap. So I still expect the dollar index to continue going up. I expect the dollar index to continue going up. I don't see anything else on the monthly time frame, so allow me drop now to weekly time frame. Allow me come to weekly time frame. Now coming to weekly time frame, you can clearly see how the market has been behaving. And now in the previous week, the market failed to take out the high of the previous week, and also it failed to take out the low. Market did not take out the high nor the low of last week but one. So this is where the market has been trading last week. And if you check on this market here, you will see the market had formed a double bottom pattern. You will see the market had formed a double bottom pattern, and currently the market is trading around the neckline. This is where we have the neckline now. So currently this is where the market is trading at. So I expect this coming week DXY to continue going up. That is now according to higher time frames. So let's keep dropping. Let's keep dropping on the time frames so that we can see what the market got for us. Let's see what the market got for us. So now coming to daily time frame, you can clearly see that the market has been forming an uptrend. The market has been forming a trend. The market has been forming a trend. This is on the daily time frame. This is on the daily time frame. The market has been forming a trend. The market has been forming a trend. So you can clearly see that the market has been forming a trend. And now, if you look at this market clearly, you can see the market is forming this kind of a double top pattern. So this is what the market is doing. The market dropped to this level where we have an imbalance there. Let me clear this so that you can see. We had an imbalance over here where the market came, tapped at, and it respected, and then the market went all the way up. But you can see the market did not tap the imbalance well. So what I can expect from this market is for the market to come to the imbalance, stop the order block well, and then it gives a touch over there at the trend line, and then from there we can look for longs, then from there we can look for buys. So that's what I can expect on the dollar index from the dollar index on daily time frame. So now coming to 4 hour time frame. Coming to 4 hour time frame, it's clear that this market is forming a possible bullish flag. This is a possible bullish flag on H4. It's a possible bullish flag on H4. So we expect the dollar index to first give us a sell, come to this level, and also you can see on H4 it's a very strong area with an order block. So we expect the market to come to this area. Then from there we can now look for buys on the dollar index. From there we can look for buys on the dollar index. So that is it for the dollar index. Let's see whether 1 hour time frame has something different. Let's see whether 1 hour time frame got something different we can be interested in on the dollar index. So coming to 1 hour time frame, what I can possibly see is this bear flag, which is going to give us entries for the sales for the market to continue coming down, come to a point of interest. So we have this bearish flag. We have that bearish flag, and if you look well, the market is giving an head and shoulders pattern. We have a shoulder over here. The market is giving an head and shoulders pattern. This one. So this one gives us now confidence that the market will come to a point of interest over here. So let's wait and see how the market opens. There's high probability that the market is going to open with gaps. I saw something over the weekend, I can't remember, was it yesterday or when. So there's high probability the market is going to open with gaps, but we expect the market to come to our zone around 98.5, around there. Yeah. So market open, we expect the market to drop. That is on DXY. So the next pair we are going to have a look at is USDJPY. USDJPY. Actually, currently I more check on UJ than GU. So let's check on USDJPY. USDJPY. If you remember correctly, I shared these trades the last time we did analysis. I shared this one, and you can see market is doing well. I expect a breakout, then a retest, and it happened, and then the market moved up some good pips. Let's confirm how many were there. So from here, the market went up. That was 156 pips. Later the market came back to our entry, and now the market is still going up. So I still expect this market to go up, and if you look on this market well, you can see the market is currently forming a possible inverted head and shoulders. The market is forming a possible inverted head and shoulders. So we'll be waiting the market to completely form the right shoulder. We'll be waiting for the market to completely form the right shoulder, and then from there we can take our longs. So we just use this one on 30 minutes. I believe it's going to be clear. So here is the target. So with this, I expect the market to have given the left shoulder, everything over here to be the head below the zone, and then as it is now for the market to just drop to this level, and then from there we can now have a complete inverted shoulders, and then we continue going up to hit our target 160, 160, 163, 165. Yeah. So that is it on GJ. That is it on GJ. I don't have to do much of analysis on that. So I expect the market to drop, and then we can get an entry to continue buying. We can get an entry to continue buying. So yeah, 162, then long sells. All right, so first let's watch how the buys are going to behave. Yeah, so that is UJ. That is on UJ. So allow me to check on what? Allow me to check on USOIL. USOIL on commodity. USOIL. So if you remember correctly, I shared this trade some times back, and the market played out very well as expected. And currently, how things are, I expect more buys on this, because we have a lot of liquidity which has been collected. A lot of liquidity has been collected, so I expect this market to continue going up. So these were the first entries we had. This was our first entry. This one was our second entry, and now I expect this market to continue going up. So what I'll do, I'll mark the highest point where the market went up to. That was around 120, no, at 119. So that was at 119. So from now, the current market, I expect oil to continue going up, and I expect it to go to around 125, 130, probably 130. So I expect oil to continue going up. I expect oil to continue going up. The market might open with gaps. That's what I've said. The market might open with gaps. So let's see how the market opens first. And then from there we can now look for entries. So that is on USOIL. So allow me now to check on gold, XAUUSD. Allow me check on gold. Allow me check on gold. So so in the last session we had, we did analysis on this on gold, where I had expected the market to break out, go up, and then come for long sales. But what happened? Market did a breakout, yes, came to my zone over here, and then from there the market gave a very long sales, nice sales actually. But I've been sharing trades with you. I've been sharing trades with you on the WhatsApp group. For those who are in the group, I've been sharing those trades over there. So now, doing analysis on gold, what I'll do first, I'll mark the highest high. I'll mark the highest high or the all-time high on gold. That is it. You can see the current monthly candlestick is very strong bearish. We still have a few days to go before the month ends. So there's a probability we might take out the low of last month. Allow me mark the low of last month, where we have high probability of taking out that low. Guys, kindly give me some 2 minutes. I pick some 2 minutes, please. Yeah, you can. Somebody can unmute your mic and maybe you can communicate. Yo, I'm back. Khalifa, you are doing something, so you can continue presenting. Yeah, just continue, no problem. Young Khalifa, we are waiting for you. Or should I? Okay. Let me just continue, no problem. So we were on gold. So we had begun our analysis on gold. We had began our analysis on gold, I had marked the low of last month. What the market did already, it has taken out the high. Market has already taken out the high of last month. Market has already taken out the high of last month, and with a few days remaining before the end of the month, there is high probability that the market is going to take out the low. We have a lot of liquidity resting below there, so we expect a lot to be happening. We expect a lot to be happening in the coming few days as we end toward the end of the month. So let's see how it's going to be. Let's see how it's gonna be. So now, slightly below that, we have a key point, we have a key level, which is now the imbalance over here. We have an imbalance here, so that one is going to be our point of interest now. This is going to be our point of interest if the sales continue, of which they are gonna continue. So this is going to be our first point of interest. This is gonna be our first point of interest. This is gonna be our first point of interest. So we drop from to weekly time frame. We drop to weekly time frame. You can see last week the candlestick was very strong bearish. The candlestick for last week was very strong bearish. Now we are going to be eyeing this zone because we have a lot of liquidity over here actually. When this candlestick tapped the order block we had initially here, and then market pulled back, a lot of liquidity was left. Now this time around I expect the market to swipe or grab the liquidity and then activate the smart money guys orders wherever they are below here. So we have our zone over here, we have this order block here. So if we were to refine our point of interest to get a better entry, so if we were to refine, I'll focus on this, I'll focus on that, I'll focus on this area. So this can be our point of interest there. So I still expect the market to continue selling. I can expect the market to continue selling. That is a weekly time frame, that's weekly time frame. But now before then I can expect this market to give a short buy and then we continue with our sales. So daily time frame, I don't think I don't see anything of importance on this daily time frame apart from the liquidity, apart from this liquidity here where we are currently approaching, of which also the market might decide to just come grab the liquidity and then go up, or the market can decide first to go up then drop. And if the market goes up and then drops, that will be the best option, that will be the best option. So let's see on 4-hour time frame, let's see on H4 how does it look. So now coming to H4, over here we have a point of interest over here, we have a point of interest over there. So when you look at the market, how it currently looks like, the market has kind of a double bottom then dropped. So market open, we might see the market coming up to this zone. If the market comes up to that level and then it continues selling, that will be much better, because by so doing the market will have given us out. It can either give a bearish flag or a bearish rectangle or a bearish symmetric triangle. So we'll be watching on how the market is going to behave. So my conclusion on that is that market open, I expect gold to go up and then drop, go up and then sell, or the market sells and then still buys to our point of interest. So it depends on how the market opens. It depends on how the market opens. Remember, I've told you the market might open with gaps, so it depends on how the market will open. Now coming to M15, guys, something very interesting. On M15, you can clearly see the market is forming an head and shoulders pattern with a double. Yes? Huh? So I'm on screen. Check on your network. Check on your network. Mwenye anasema on screen kindly. So on M15, the market is forming an head and shoulders with a double top. So yeah. So as you can see currently, the market, how the market closed, it was in a kind of a consolidation. The market was in a consolidation. So it can either decide to go up or first break out of the consolidation, go up, and then drop sharply. That's most likely to happen. That's what is likely to happen. So let's wait and see. Let's wait and see what happens once the market opens. Let's see how the market opens. Is there going to be gaps? Let's wait and see. Let's wait and see. So my take on gold will be the market to sell, buy, then sell. What does that mean? So I can expect the market to give a drop, then go up either to the trend line or to the zone, and coming to the zone will be the better option. Then from there you can look for long sales to the lower zone around 4,000 or 40 what 40, let's say 4200 zone. So yeah, don't know if you have anyone with a different view on gold. Anyone with a different view on gold, and not only gold but also, yes, kindly. Young Khalifa, you can speak. Okay, so if you have no different view on it, if no one else has something to say, I believe we can end it there. We can call it a night. We can end it there. We can call it a night as we wait for the market to open and see how it plays out. So for GU, I'm not going to do the analysis. I'll just give you a recap. So based on the current market, these are a bearish watch. It's kind of a bearish flag. It's kinda So I expect GBPUSD to continue selling. I can expect this pair to continue selling. I can expect the pair to continue selling. So if you trade the pair, market opens and you get an entry, just keep on selling the pair. Just keep on selling the pair. Just keep on selling the pair. 1:2. What's up, man? So 1:2, 1:2 R, 1:2 point what? 1:2.37 R. It can be a good return. So this is what we had initially. We expected if the market breaks out, the market should continue buying. But what happened? Market failed. So you can now see what we expect. We expect the market now to drop. We have a lot of liquidity over here, so we can expect the market to swipe that liquidity. We have a lot of liquidity, which we expect the market to swipe. So, and this one, it gives us now a flag. So, guys, that is it for today. I wish you a peaceful week ahead. I wish you a blessed night. See you next Sunday for the next session. Bye bye.